All right, ladies and gentlemen, we're back with our end of day post wave report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave price trigger reports. All right, let's jump right into it. So today we had the CPI data that came out, and the market did what it did. A little rally that happened in the stock indices, and we're going to take a look at that and see what's going on. Silver and gold also had a nice little run today, so we're going to take a peek and see what we can find out here. See what's what, and see if we can figure out where the markets may be headed from here. All right, so looking at the Bitcoin futures first of all. So as you know, we came into it. Let me just pull it up here. Okay, so hold on. Okay, here we go. So we came into it today, and the market had a crash alert on it, and the market instead is like frozen still. So we had the initial crash alert back here. All right, and we got a little bit of downside production, and now the market's kind of just like hanging out there. We do have still the bearish trend momentum reading. All right, and that, as long as that's there, the market's going to be in the sell the rally mode. So it's going to be very difficult for the market to gather enough energy to run with. All right, that's going to be very difficult. Um, we are in a bull market, as you can see the little bull here at the bottom of the screen there. So we definitely have the bull market going on. But aside from that, the price action is pretty neutralized right now. All right, so we're in that we're in that bull market, and we're kind of like flatlined here. So I think the market's gonna probably consolidate for a while around this 30,000 level, and we probably won't see too much going on here, at least for right now. All right, so next up we got silver. All right, high hold silver, right? So silver acted up today. It cut up a little bit. Had a decent rally there. So let's take a look at where we were. So we have a bullish trend momentum reading now. So we were wide open coming into this, and the market did rally. I gave you the $24 initial upside target, and that was met today. So the initial upside target has been met. Notice how the market respected here at the top of the Kumo cloud. It respected it, all right, and stopped short of that that top of that Kumo cloud resistance. So we'll see if the market wants to try to poke through or not, tonight into tomorrow. But as of right now, you're wide open. You got the bullish trend momentum reading. The market's bullish, long term, intermediate term. You are ready. You're ready to rock. It just needs to get enough force to get above the Kumo cloud, and then we're doing something there. If this thing can get above the Kumo cloud, I think the market will be in a very good space at this point. Just needs a good solid close above the $24.60. We can get some consecutive closes above that. I think that'll give enough support to the market, and it can make a serious run back up toward the old resistance, 26 handle resistance. So I think the market has the potential to do it. It does have it. I mean, we have the bull market conditions, and all the market needs to do is rally at this point. That's all you're waiting for it to do. Now, we should note that since we've been in this bull market, when the market rallies, it's had these incredible corrections. All right. The bearish trend momentum reading always comes in and spoils the day. Then the market recovers and rallies again. Then that bearish trend momentum reading comes in and dashes all hopes and dreams, and then it runs again. Now, it should be noted that silver can be quite volatile. It can be all over the place, but it doesn't mean that you still can't have some action. So right now you're bullish and it's looking good. So still the long side is being played right now in silver. Nat gas. So nat gas is still in a bear market. That has not changed. You see the bear? Still in a bear. That has not changed. You're locked in with a bearish trend momentum reading. There's nothing else to see here in the nat gas. Dow futures. So Dow futures rallied today on the CPI data. Tomorrow's PPI, and I think jobless claims or something like that. So we had that run up, but even still, with the run up, you still couldn't break through the resistance line, and you got a bearish trend momentum reading still. So all of that, and still could not change the bearish trend momentum reading. It still did not turn green. All right, so that's an interesting development to take a note of. The market did not push through. Now, we did make a bullish pointer on the day. So it's looking like the market will actually push through. And there's a strong probability that the trend will reclaim the price action. All right. So I'm seeing that as a strong possibility. All right. But this bearish trend momentum reading needs to come out of there. It needs to turn back green, man. And then the market can run. As long as it's red, the market is not going to run. Period. It can't. It's impossible. It will try, but it'll keep getting knocked down and kicked. All right. So we're hoping that the market can do a little something, something and get some momentum going. If not, then I know I said it to you before. I got to tell you again. These old lows, these old supports back here from March are going to be in play if this market can't stay above the Kumo cloud. So a nice little rally off the lows, but it's going to have to sustain it. All right, it's going to have to sustain it. It's going to have to take out the 52-week high on solid closes, consecutive closes, and keep running. If it does not, then you could be looking at game over. All right, so I know it looks nice, but it still hasn't changed anything. We still got to watch it. Next up is the NASDAQ 100. Now, the NASDAQ 100 has been the strongest out of all of them. And we hit a new 52-week high today. And it did it on a rally. Notice how the bot check we had yesterday told us that this upside was coming, and it came immediately. It didn't pause. It just ran up. So the NASDAQ is now wide open, and it's running. It's just running. And we got the nice ramp here. So the market is taking advantage of the rampage. And it looks like we have a little bit higher to go here as this market is wide open. It is bullish. Some people believe that the market may even be a little overbought. I do not buy into that. When the markets are locked in on a trend, meaning that you have a long-term bull market, intermediate bull market with a bullish trend momentum reading, yeah, that market is there's nothing stopping it. There's nothing to stop it. Not at all. Not at all. The market's wide open at this point. So we are bullish, the long and intermediate, and we got a bullish trend momentum reading. There's no such thing as overbought. Not when you're locked in. This bull market in the NASDAQ 100 is locked in. All right, nothing too short. Every signal is long. Nothing short, just long signals. Not one short on here. All right, that's to be noted. All right, the shorting was back here. The sell the rally mode was back here, back in this time frame in September of last year. We're in a new spot now. This market's wide open. It wants to run. I know it may not make sense, but that's what's happening. So we got to take what the market gives us. Next up, we got gold. Now, gold is very interesting at this time because We got a bearish trend momentum reading, bull market long term, bull market intermediate term. But we got a bearish trend momentum reading, which is just hammering the market. Now, we had this negative bot check. We only had this little down move here. I don't think that was the bot check. I think a bigger down move is coming. I think once the market bumps his head at the bottom of the Kumo cloud, it's going to be a wrap. All right, it's going to be a wrap. And that will put gold at $2,015. That's where the bottom of the Kumo cloud resistance is right now, $2,015. So it can run and it can get up there to near the 2,000 mark, but that's when it's going to bump its head and the price action is going to be knocked all the way back down. All right, it's going to be knocked all the way back down here. All right, to the low 1900s. Okay, and even below 1900. That psychological support. All right, that's held so far. I think the market's about to take it out. It's just running here, and then it's just going to fall apart unless this bearish trend momentum reading goes away and it turns bullish. The market is in trouble. All right. Next up, you got the S&P 500. S&P 500 also rallied today, hit a new 52-week high, and you're running. All right, the market is running. It's wide open, bullish on all three measurements, long-term, intermediate term, and a bullish trend momentum reading. You are good to go. Market's going to do what it's going to do. Okay, so this is wide open. Next up is crude oil. Now, crude oil, as you know, was going on and off, being neutralized for the longest time. Way back here, just totally neutralized. Then it came off, and now you're running. So you're having a bear market rally off of this long-term consolidation. And you have a bullish trend momentum reading. So the market is being bid at this point. But the long-term trend is still bearish. Intermediate term is still bearish as well. And you got a bullish trend momentum reading. Can this bear market rally get deep enough to keep it going? And you hit $75 a barrel today, which is quite the run. But I hate to be Nancy negative, but this 52-week low, this massive bearish pointer, needs to be reconciled at some point. It will be reckoned with at some point. Okay? Just FYI, just like this gap back here was eventually reconciled. So I'm just saying, all right, pointers get taken out. This old bearish pointer that hit on the 52-week low eventually was taken out too. It took a while. The market rallied powerfully, like it wasn't going to stop. And then it came down here and took out the old bearish pointer. But it didn't do it for normal bar. It did it with another bearish pointer bar. So that means we haven't seen the lows. This old low was not the low because this low took that out. This low also is not the low. So at some point, the market will come back down and reconcile that bearish pointer. Can it take a long time? Yeah, it can. So just be prepared for that. You trade what you see now, but just remember, you're still in a bear market. As long as these bars are orange, the trend can at any point come back and reclaim the price action, and then down you go. All right, so just FYI. Next up is the Russell, and you can see here the Russell was the weakest. All right, it had been in a long-term bear market, and we had a bearish trend momentum reading the boot, so it was locked. This was a locked-in bear market. Then all of a sudden, the market got a bullish trend momentum reading, and it really struggled to do anything. Then all of a sudden, the market breaks out, and then it consolidates again, even pulls back, rallies again, pulls back one more time. Bullish indicator. We got a positive bot check, and then the market breaks out. So it's running right now. And guess what? The Russell, you can make an argument that the stock indices were just waiting for the Russell. Today, based on the algo charts and the way the market moved, we have now crossed over from a long-term bear market to the beginning of an official bull market. See the little baby bull bottom right hand corner, green. All right, so this is day one. This is the official first bar of a new bull market in the Russell. I know, weird, right? So can the Russell get to 2K? That's where the old resistance is. We'll have to take a look and see. We will see. But right now, the market's wide open and willing to run. So the running of the bulls commences. US dollar index. So the US dollar index is really giving people gray hair. All right. Here's your US dollar index. For the longest time, we were heavily consolidated 101 to 105 trading range, 400 pip trading range. Today, the market breaks out of that trading range to the downside, hits a new 52-week low, and breaks, almost got to the point of breaking below par. You know, almost breaking below par, which is quite astonishing. Quite astonishing. And 52-week low. So, yeah, it's broken out and it's broken back to the downside. So, the price action has been reclaimed by the trend. That bearish trend momentum reading is still there. I thought the market would be able to do something once it got to that 105. If those going to try to make a run back up here to the old highs, but just didn't have it in it. And the bear market just sold off. That's one thing that I stress with you is that when you have these negative trend momentum readings, you are in the sell the rally mode. So the market was allowed to rally to a certain point. The bears come in, beat it back down again. Let the market rally again to a certain point, come back down, beat it back down again. It's just the nature of the beast. All right, next up we got the Ethereum futures. So here's Ethereum. Ethereum, as you can see here, is long-term bullish, intermediate term also bullish, but we got a bearish trend momentum reading. And like Bitcoin, it's starting to consolidate up here at these levels. I do believe that the market is more likely going to pull back. It's having a real hard time up here at the 2000 price level. And every time it gets up to the 2000, it can't hold it. Back here, it couldn't hold it. Ran up here, said peekaboo, and then couldn't hold it. Now we're coming up here one more time, and the market pulled back, couldn't hold it. So I don't know. I don't know if it's going to be able to punch through or not. We trade what we see, and right now, it's sell the rally modes in Ethereum. All right, got time for one more. I see you want to see NVIDIA. All right, let's see what we got. That's been a hot topic. Let's take a look, see what we got. All right, so here we go. All right, that's the wrong chart. That's something totally different. I don't know what that is. That's not NVIDIA. Let me try that again. Okay, here we go. Sorry about that. All right, here is your NVIDIA. So as you can see, NVIDIA is in a long-term bull market, intermediate-term bull market. But there's a problem. Yes, you got a bullish trend momentum reading. You are bullish on all three indicators, right? But you got a problem. And that's this gap back here that was made on the week of May 25th. The market has not corrected that. So we know a pullback's coming. The higher you go, the lower you fall. So at some point, the market is going to have to do something here. Let's see here. Give me just a second. All right, let's see. All right, so down here, and then so we had 439 on the close today. That means you're going to be dropping back quite low. I mean, you're coming back all the way down here to the 379, man. Good grief. So this market is poised to have to drop back below 379. I think that's exactly what's about to happen. Yep. That's quite the fall, you guys. That's quite the fall. Quite the fall. We'll see what happens. Um, but yeah, at some point it's going to come back. It's better when the markets correct and fill those gaps immediately, because if not, the longer it goes and the higher it goes, a humongous crash is going to come, because it's going to have to come down here and close this gap. Gaps and pointers are always reconciled. Always. It can take a long time, but they're always reconciled. Okay. So just FYI. But this market's wide open. It's extremely bullish. It's a buy until it's not. You just have to be careful, because it's gone quite a ways from the gap, and it's going to need to come down here and do something about this gap. It's probably going to pull all the way back to 338, somewhere between 338 and 349. That's where the price is going to correct to. All right. So there you have it, ladies and gentlemen. You know what it is, man. The system works if you work this system. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. Smash that like button. Peace.